Should my family file taxes as married filing jointly or separately? Imagine sitting down to organize your tax documents, feeling a little overwhelmed. You might wonder if you should file your taxes with your spouse together or apart. This decision can affect your refund, credits, and even your legal responsibilities. Let's look at what each option means and what might work best for your family. When you file as married filing jointly, both you and your spouse combine all your income, deductions, and credits on one tax return. This usually lowers your overall tax bill because the IRS offers a higher standard deduction for married couples filing jointly. For 2024, that standard deduction is $29,200, which can significantly reduce your taxable income. Filing jointly also makes you eligible for more tax credits, like the Earned Income Tax Credit, Child Tax Credit, and Education Credits. These can add up to bigger refunds or lower taxes owed. On the other hand, married filing separately means each spouse files their own tax return. You report only your income and deductions. This can sometimes lead to paying more in taxes because the IRS often assigns higher tax rates for separate filers. Plus, many credits like the Earned Income Tax Credit or Education Credits are not available if you file separately. It also means you and your spouse need to decide whether to itemize deductions or take the standard deduction, and both must choose the same method. Filing separately can also increase the taxable portion of Social Security benefits and limit deductions like student loan interest. There are times when filing separately makes sense. If one spouse has a lot of unpaid taxes, child support, or federal student loans, filing separately can protect the other spouse from being responsible for those debts. If one spouse is a non-resident alien without a Social Security number or individual taxpayer identification number, filing separately might be the best choice to avoid taxing their worldwide income. Also, if you are separated or planning divorce, keeping your finances separate might be easier, despite the potential higher taxes. For Latino families, filing jointly often helps with immigration matters. It shows a genuine marriage, which can be important when applying for green cards or other immigration benefits. Filing jointly can also simplify the process because you gather all your income statements, like W-2s and 1099s, and combine them into one return. This makes organizing your tax documents easier and less confusing. In states where community property laws apply, like California or Texas, income and expenses are shared equally. This can influence whether filing jointly or separately is better, so it's good to check your state rules. Remember, choosing the right filing status depends on your family's specific financial situation. It's often helpful to talk with a tax professional who can look at your documents and guide you to the best choice. Organizing your tax documents carefully will make this decision easier and help you file accurately.